Good morning everyone and welcome back to Morning Markets here at True Potential. It's Thursday the 12th of October. Today we're going to talk about bond markets and the influence of movements in yields upon global equity markets, and we're also going to briefly discuss the recent UK GDP data for the month of August. Welcome to today's update. I'm Kevin Kidney. We're first going to discuss the move in bond markets. It's perfectly reasonable that following the conflict in Israel to have expected bond markets to react with prices rising and yields falling. What is perhaps more revealing has been the impact on the equity market. We perhaps may have expected equity markets to have fallen, prices to have fallen based on the outbreak of a conflict. However, equity markets have been more sensitive to movements in the bond market, and bond prices have been fueled by recent updates from Federal Reserve members. So some of the voting committee have recently updated their language to say that the recent rise in bond yields has actually led to further financial condition tightening, and that is going to alleviate their concerns about increasing interest rates further. So financial conditions have tightened. That is a broader fall in bond prices and equity prices through September. And this has alleviated concerns from the broader committee that financial conditions have eased too much. So somewhat counterintuitively, they are updating the market that the recent reflattening in the bond yield curve has led to enough of a tightening to alleviate any concerns about inflation pressures. So we of course remain sensitive to further guidance. Perhaps the frustrating thing here is that we're getting further price volatility. However, what we have seen is ongoing fall in bond yields, that is higher prices, and this is fed into higher prices in the US markets. And we're seeing things like outperformance of Japan, where a couple of our managers are overweight. In fact, Japan is actually up 5% over the last week. So we're seeing some recent strength in equity markets, which colleagues will update you on further as we go through the week. Elsewhere, a short update on UK GDP. 3 months through the month of August, we've seen GDP increase by 0.3%. This is pleasing, although it is still quite low. We're seeing GDP growth of only around about 0.25 to 0.5% over the last 6 months. So hopefully, as inflation falls and price pressures continue to decline, GDP can pick up and we can see a broader elevation in output across the UK economy. That's all for today, but please do join us tomorrow where we'll update you on US inflation for the month of September. Thank you very much and take care.